Hi, I'm Simon from Business Depot. Today we are discussing what is working capital and why is it so important. Working capital is a measure of a business's short-term liquidity. It is a measure of a business's current assets less its current liabilities. Why is it so important? First and foremost, working capital is used to fund a business's day-to-day operations. A business needs working capital for crucial operating requirements, such as paying employees, funding inventory purchases, making repayments on loans, and covering tax payments. A working capital surplus will help a business ride out periods of low revenue or seasonal cycles. For example, you may want to plan on purchasing additional inventory in October to cover increased sales over the Christmas period. Working capital funds the additional upfront purchases, which allows you to increase your sales volumes over Christmas. A healthy working capital balance can also be used to fund business's growth without the need to draw debt or have the owners chip in additional capital. With a good working capital balance, a business can potentially cover the costs of growth while still having enough cash left over to meet the short-term operational requirements. For example, you may need to move to a bigger warehouse to increase inventory holding levels in order to take on a bigger client, fund an advertising campaign, hire additional support staff, or develop a new product for sale. Amongst the vast reasons we see for why people own their own businesses, one common reason they do is to provide a source of wealth and income for their family. If you're looking to distribute the profits made by your business back to your family, where do those funds come from? Working capital. Now that we know it's important, how can we improve and sustain a healthy working capital balance? The starting point should always be good budgeting, forecasting, and reporting. Starting with a three-way budget that includes a cash flow will help you plan for any potential pinch points and give you an insight into the available working capital for day-to-day operations and growth. Will you need an overdraft to cover a stock purchase leading into a busy period? A good forecast will give you this data. You also need to track your actual performance against the budget and look at a few key metrics such as your free cash flow and your ability to turn your profit into cash. You should also look at the areas which traditionally lock up working capital, such as inventory, debtors, and creditors. Can you find improvement in this area? The BD team has a huge amount of experience and working knowledge around managing working capital and are always more than happy to help.